Welcome back to another episode. Today, I want to take a closer look at CoreWeave. The overall stock yesterday announced their final pricing of their debt offering. And I did a video on this a few days ago, kind of explaining what was happening. Now that we have more data, I want to just share my overall thoughts. So let's take a closer look in today's episode.
I want to thank The Motley Fool for sponsoring this video, and check out fool.com/Jose for the 10 best stocks to buy now. With that link, you get a promotional offer for the subscription service. Now, let's continue with today's episode.
All right. So first, today's definitely seems to be a pretty red day for the overall tech players. As I am recording, we see CoreWeave down roughly 5.7%. We see Nebius, another kind of neo cloud player, down roughly 4%. We see even Microsoft down roughly 2.4%. So today we do have a few events. I mean, we've seen a nice amount of AI data center investments globally from all big players. We also have the Fed decision happening today. And then we also do have Oracle earnings, right? Oracle right now is down about 0.5%. But whatever story they paint in the AI story could definitely kind of create this sentiment or trend for our other neo cloud players and our other AI data center players as well. So right now, like I mentioned, CoreWeave did announce the final pricing and the information of their convertible note offering. So originally was expected to be 2 billion. Now they actually increased it to 2.25 billion and added an extra amount that they have the option to increase it to closer to 2.5 billion dollars. Now this happened yesterday, and the stock actually kind of like the results. We see yesterday the stock was up roughly 7% and reached $90. Now we're pretty much at levels, which is pretty weird, right? You see this 5% dips, but it's still up roughly 1.5% from yesterday. So again, not much has changed right now. It could just be the overall fear and volatility of what's going to happen with the Feds, what's going to happen with the overall Oracle earnings, what's happening globally as well. So I don't think it's anything always dependent. Now let's look at the data here. So I highlighted the things that we know now with this upside 2.25 billion convertible senior note offering. So it's going to start at a principal amount of 1.75%. So obviously a lot lower interest than their typical senior notes, right? Because these are convertible. So senior notes tend to have, your typical traditional senior notes tend to have a lot more interest. And we saw in the episode for CoreWeave, some of those were 9%, 10%. Now, this was 1.75%. Some people might be wondering, Jose, why would someone lend money to CoreWeave and only get 1.75% interest back? The main reason is because you do have the offering to convert this into shares instead. Now, they announced the upside, and they announced that you can actually get an additional 337.5 million added to those notes. So a little bit over 2.5 billion dollars. Now, the initial conversion rate is approximately at $107.80 per share, which is about 25% over the last reported sales price for CoreWeave when they announced, which was $86.24. So for the people that are lending the money for CoreWeave, the best bet for them is they hope CoreWeave within the next 5 years is anything over $107.80, because this is where they're going to make a lot more money opposed to that 1.75 convertible note that they have, right? It's the conversion that is the actual the convertible and the conversion of actual shares, what is enticing to these lenders right now. Now, this is very exciting for CoreWeave, right? Because now you don't have, you're adding $2.3 billion or so after paying everything off. And you don't have this massive amount of interest that you have to pay opposed to some of the other interest that CoreWeave has. Like I mentioned, some of them as high as 9 to 10%. The downside here is if they do convert to shares, that adds dilution, right? That adds dilution. So to protect from dilution, what I mentioned in last episode is they enter into what is called a cap call transaction. Now, the cap call transaction will initially be at $215.60, which represents a premium of 150% over the last reported sales price. In my opinion, the reason they put a cap call so high so high, this high, is because they do expect the stock price within the next 5 years to reach at least near those levels, right? Because the more cap you hire, the higher the cap, you're actually paying a little bit more on the premium, right? Because you're protecting yourself, right? If it was a lower cap call, you pay a lot less because you're only getting insurance for, let's say they did 100, if they did a cap transaction at $150, it's actually a lot cheaper than doing it at 215 because you only get the protection between that level. But now if you have a 215, you increase your protection limit, so you're paying more for that insurance. So if you're willing to pay more for that insurance, in my opinion, it means that you believe you're making this worthwhile. So the cap call transactions are expected generally to reduce the potential dilution to CoreWeave's Class A common stock. So they pay for this insurance, and if for example, CoreWeave stock does hit over $200, in theory, they can just buy back the shares and still kind of have that nice amount of money that they kept, right? It's a win-win with this cap call transaction. Now, they don't have to use this money to potentially offset any dilution, but it is there at least for the opportunity to do so. So at least at right now, shareholders should be excited that one, CoreWe've got an interest rate really low, 1.75, and the conversion rate is 25% premium over the initial price right now. But more importantly, that cap call is over 150 premium of where the stock is at right now, and or where it was actually where it's at right now, right? 150% premium from where it's at, and it's over 100% premium of the conversion rate, right? What was the conversion rate? The conversion rate was 107, so it's actually 100% from that conversion rate, which I thought was pretty exciting. So again, I don't think this should be a reason for the stock to go down. Now it is going to be interesting to see what they do with this money. They've said that they're going to use it for your typical corporate um, solutions, right? That everybody says. But are they going to? How many more GPUs are they building? Are they buying a new data center? What are they leasing new land? Is this to kind of expand or accelerate some of the other data centers that they're building for themselves, like the one in Kenilworth or the one I forget where in Pennsylvania, Lancaster? So overall, I think this debt is finally some good debt happening for CoreWeave. I am still a firm believer that this is going to be a multi-bagger stock, $200 billion within the next 5 years. Obviously, I understand the risk. I talk about it in every episode, the debt, the interest, the slowdown in AI demand, how revenue takes time to kind of correlate based on how the systems get turned on, the fears of the depreciation. All that I understand, but regardless, I am still very much bullish in the AI infrastructure space right now. I think the demand for AI is still much higher than what the market thinks, and even than what we're hearing from all these players. The amount of AI solutions continue to grow, and I'm pretty excited. So that's what makes CoreWeave for me one of my favorite plays and one of my top players actually in my overall portfolio. Now, like I mentioned, Oracle is reporting earnings today, and it seems like the market is turning a little bit around. We are pulling a little bit up. Now, Microsoft is actually down roughly, like I mentioned, 2.3%. Hopefully, we see some reaction moving back up, but I don't know. What I'm actually excited about Oracle is they are reporting today, December 10th, after the market closes. I am an Oracle shareholder. I've actually been purchasing in the low 200s for Oracle. Where are we at right now? I actually even purchased more at the 120, at 195. So we're at 221. Really great at my purchasing right now. What I'm really want to listen about Oracle is this. So obviously we know of Oracle's massive RPO, right? Nearly $500 billion in RPO. And that number is great. But what I think is more important is how we're going to get there, right? For example, their fiscal year 2025, they mentioned that they did about $10 billion in Oracle Cloud infrastructure. For this fiscal year of 2026, and this is going to be, what quarter is this going to be? This is going to be quarter two of fiscal year 2026. They expect about $18 billion in their Oracle Cloud infrastructure. And for fiscal year 2027, they expect about 32 billion. So for me, as an AI investor, obviously it's cool to see estimates to fiscal year of 30, fiscal year 2030, but that's a lot of hope and expectations. But what is not hope and expectations? What happens this year, and in my opinion, within the next 12 to 24 months, is not that crazy to try to price in. So any update to this, if they come out and say, look, fiscal year 2026, we thought about $18 billion in Oracle Cloud Infrastructure, we're actually upping that to 20 billion or to 22 billion. That to me is extremely bullish because it showcases that this trend could continue to grow higher. Maybe they give us an update on fiscal year 2027, which I doubt, but any upside on fiscal year 2026 could create some extremely bullish sentiment escaping that AI bubble thesis and could be really good for companies like CoreWeave, for Nebius, right? Because it means that the demand is truly, truly there, which I do believe is true. Now, the downside is, unfortunately, if they come out saying, look, we're actually going to reduce our fiscal year 2026 estimates for this year. And then everybody's going to look at it and say, look, they're actually reducing it for this year. That means everything else is going to go bad. So that could create a massive sell-off. But I think now that they gave us this roadmap, right? They give us this roadmap. I don't care about the end story. I don't care about that end goal. What I care about is the steps we're taking there and making sure those steps are in line with the projections that they gave us. And this is how, in my opinion, you're able to tell where we are in the AI bubble. If the AI bubble is escaping us or if the AI bubble is something that we shouldn't even worry about. Like again, if we get $20 billion instead of 18 billion, that shows strong indication. If we get upside growth here in the short term, right. When I mean in the short term, I mean if the ones closer to us give us those upside, that is an indication of the potential tailwind that's to come. So yeah, that's my overall thoughts here on CoreWeave. I probably will be covering Oracle earnings. And if you haven't, make sure to join us at whatthechipHappened.com. This is the greatest community for AI and semiconductor investors. I do deep dives almost a few times, 3 to 4 times a week. We have a monthly live stream. We have a community of chatting. It's people all over the world. This is the greatest AI semiconductor community. And you guys know me. I breathe and eat and sleep the semiconductor space. So I'm always learning and I'm always sharing all my thoughts. So make sure to check it out at whatthechipHappened.com. Peace out and see you all next time.